Welcome back to NHK Newsline. I'm Kanako Sakno. Tokyo stocks are plunging following a tumble on Wall Street. The Nikkei 225 fell more than 1,000 points. For more, Jean Ortani joins us from the business desk. So what's the latest, Jean?
Well, we got an hour more to go for the trading day here in Tokyo. Tokyo's benchmark Nikkei dropped more than 1,000 points in afternoon trading. The first time it's fallen that far since March. The decline follows Wednesday's plunge in the Dow Jones Industrial Average in New York. The Nikkei is now trading like this, 22,546, down by 4.08%. It's up by just a fraction, 959 points downwards at this time. It has fallen below the 23,000 level for the first time since mid-September. All sectors are trading lower. Looking at other markets in the Asia-Pacific region, major indices, including the Shanghai Composite, Hong Kong's Hang Seng, and Seoul's Kospi, all trading sharply lower. The declines are mainly due, once again, to overnight drops on Wall Street. The Dow plummeted more than 800 points to 3.1% on Wednesday. Rising bond yields and lingering worries over the trade dispute between the U.S. and China were the main factors driving down share prices. Many investors sold shares in New York because higher U.S. long-term interest rates raise companies' borrowing costs, eroding their corporate earnings. The dollar is also dropping. The slide in share prices triggered selling of the greenback, briefly sending it to the 111 yen level for the first time in 3 weeks.
Let's turn to our top business story. Shares are falling sharply in Asia. This follows a slump on Wall Street the night before, and it's all led by a major sell-off in tech stocks. The Dow fell by more than 800 points. The Nasdaq had its worst day of losses for 7 years. Investors are becoming nervous, it would seem, about rising US borrowing costs, which are being reflected on the bond markets at the moment. President Trump was quick to point the finger of blame at the US central bank, the Federal Reserve.
No, I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy.
I wonder what Jerome Powell has to say about that. We've got Nina Trentman with us for the briefing from the Wall Street Journal. Interesting times. We all thought this bull run that has been relentless, it would seem, would have to come to an end at some point. There'd be some sort of correction. Give us your take on what's going on.
Yeah, as you said, people have been expecting corrections for a long time and have been saying, well, given that it's been 10 years since the financial crisis, this must end at some point. But of course, it hasn't so far, and we're seeing.
And this might not be the end.
No, this might not be the end, because we've seen markets go down a bit earlier this year. We've also seen it in previous years, but we haven't seen that stabilization on a lower level that people were expecting. As, for example, the Federal Reserve in the US is raising rates, and also quantitative easing is ending in the European Union, in the Eurozone. Of course, we have a number of factors that are coming together, like, for example, Fed rates, but then also warnings by the IMF about global economic growth and outlook. We have trade tensions between the US and China. So there's a lot of factors why stocks could go down. And we also have the issues around, or concerns around, tech companies, whether there's going to be future regulation around them. We have Facebook having its scandals. So there's a lot of factors.
There's a lot going on. I mean, right now in Asia, we're seeing Japan down nearly 4%. It's right across the board, actually, in terms of share slide in Asia. We'll see what happens in Europe when it opens a bit later on. But we've got the fourth quarter earnings season starting quite soon. And there's quite a bit of concern about what might be said in those in those earnings reports as well, in terms of the impact of the tightening of the situation with regards to the US Federal Reserve, increasing interest rates. Of course, it means borrowing is more expensive for companies, etc. Margins are a bit squeezed, that kind of thing.
Well, it's also this that, of course, companies and investors have gotten used to very, very accommodative and supportive conditions for a very long time. So anything which is a bit more like normal appears to be really expensive and high. And of course, now this is the earnings season where we're expecting that more companies will report on impact of tariffs, for example, on their business. We've seen price inflation with regards to business prices. So there will be some companies that will be hit harder than others. And of course, in a very volatile environment as we're seeing it now, that could sway markets one way or the other.
All right, thank you for now. Nina will be back. And also in Business Briefing, we'll be live to our team in Singapore for the very latest on what's going on in Asia.